All right, going along on MNQ during the, I believe that's the 750 to 810 macro. Entering on a inversion fair value gap. Leaving a lot over my partials and terminuses. I had my eyes on these set of 5-minute relative equal highs. I thought of it as a great intermediate drawn price, as a great partial area. Very obvious that price would want to disrupt that. Also, I forgot to mention we used a 5-minute bullish suspension block as well as confluence to enter our trade. I have my stop right below the bottom of that 5-minute suspension block. My terminus is a 25.93 2.5 level. I had that level marked out earlier in the day as a potential draw, and when I came back, after we opened for Asia, I kind of like thought of that as a great draw on liquidity. So that's where I set my best case scenario for terminus, but it is not required. Price trading above the inversion fair value gap. I like how the wicks are piercing the top of it, but bodies are failing to close in the upper half. This trade took a little longer than I wanted. It was in it for about an hour and 20 minutes. But we got what we wanted, so all good. Obviously checking higher time frames, the 2-minute, 3-minute, 4-minute, 5-minute. Just making sure that market structure looks okay. Adjust my stop up just a little bit. We're starting to get to the heart of that macro. I want to start seeing strong displacement to the upside. Once again, price failing to close in the upper half of that inversion fair value gap. Starting to see strong displacement. I really like that. That's telling me that I'm on side. Move my stop up just a little bit. I'm annotating a 1-minute fair value gap. Just want to see price use it as support. This is where we start flirting with my limit order for partials. Stop is moved up to below consequent encroachment of that inversion fair value gap. Annotate a bullish 1-minute order block. Price slipping back into that order block. That's permissible. I want to see price stay above the order block and above the mean threshold of that order block, which is the 50% level of that order block. price failing to reach that fair value gap as well as the mean threshold of that order block. Take off risk. Everything looks in my favor. So far, so good. And there we go. First partial booked. Majority of the position off. Trader is paid. So now we're looking for final terminus. Again, it is not needed. We have made money on this trade. Just labeling the draw on liquidity. I like how we have closes, candle closes above those 5-minute relative equal highs that we took partials at. Annotating a 4-minute order block. Adjust my stop up a little bit more. I like to have my stop below 1 or 2 PD arrays. Just, you know, ICT even mentioned that he likes to do that as well, I believe, just because it gives them a better idea of how price is reacting. You know, if 1 gets disrespected, it's okay, but if 2, then there's a chance that it could come for your stop. So it's just something I've always, you know, kept in my trading. All right, we're staying above that 4-minute order block. I really like this. And we're also nearing the next macro, which is the 850 to 910 macro. And this happens with Asia a lot. If you're in these longer trades, sometimes these trades take so long with Asia. There's lower liquidity. So you can trade 2 macros if you're in that trade long enough. Just annotating, just trying to talk nice to to MNQ because sometimes she can be toxic. So you gotta talk to her nice. Annotating a 4-minute fair value gap. Again, I want to see price respected and use it as support. My stop is below the mean threshold of that 4-minute order block. That's what you see in that red line. That's my last draw, my last line in the sand for price going against me. I want to now see displacement away from that 4-minute gap and those short-term highs to the left of price. Beautiful. Little smiley face. This was a great trade for just overall market structure. I mean, it took a while, but I just love how I was able to just annotate everything and watch it, and that's it.